As we move into technical analysis, we want to, or it's necessary that we do look at charting in particular. Here we've got just a basic chart. Before I go through candlestick charting in particular, there are a few variations of the ways you can plot certain price movements on charts. Firstly is just your basic line chart, which just plots whatever time frame you pick. At the moment I'm intra-minute. You can obviously select daily or whatever it is that you're seeking out when you're doing your technical analysis, and this will just simply plot from day to day the different prices. Moving forward, a lot of people do tend to use variations of a line chart simply because it shows open highs, lows, closes and so forth, so you can, I suppose, determine a lot more finite information about those time periods that you are plotting. Some other variants is just simple bar charts. So when I zoom in here, it is just a bar for the high and low of that period. A little bit further on is the high-low close. So we can see here you've got the high-low and the close, usually denoted by the little sticks that stick out of the wick. More importantly, most people will end up using a candle chart. Now the way a candle chart works, we'll go into in a little bit, but what I normally do for my charting in this instance is we'll set colors. A lot of people do like to do this just to differentiate a bullish from a bearish candle. We'll go through what a candle is in just one second. So for example here I'd specify that for an up price I want a green candle, and for a down price I'd like, or a bearish candle, I'd like it red. And it just helps you obviously plot out what that particular stock or product is doing at any one point in time. So moving on to candlestick charting, this is a very basic diagram of the two different types of candles you'll get and how they work. So the basic structure, the lines above and below are what you refer to as the wick of the candle, and then you've got the body. Now, what happens is as that period that you've selected, whether it be intra-minute or daily, weekly, monthly, what have you, the opening price will be denoted, the closing price, the body here is obviously what trades in between, and above and below will be your high and low for that trading period. So in the instance of a bullish candle, what you'll find is with the body of the candle, the open price of that period sits below the closing price in the body, and it usually is denoted by a hollow candle, as you can see. So therefore the lower shadow is as low as it's traded, the upper shadow is as high as it's traded within that period. But again, when the closing price finishes above the opening price of that period, it is a bullish candle. Now the bearish candle in this case usually is denoted again by a thick body, or I suppose if you want to call it a full body rather than a hollow, as you can see on the left with the bearish. This is when the opening price sits higher than the closing price in that body. Again, your lower and upper shadow denote your lower price for that period and your upper price. So obviously in this instance, for just the basics of charting, in technical analysis, you're looking at if it's a really positive trend or a positive movement, you'll find quite a number of bullish candles in a row, and alternatively, a downward trend would be denoted by a large number of bearish candles. Now, these are just your standard candles. There are different types of candles. So, you've got the doji candles and hammer candles, engulfing candles, and so forth. And these can even in themselves, I suppose, specify a trading opportunity for you. I'll go through those in some following CFD tutorials, but just for now, here's the basics of candlestick charting.